Welcome, entrepreneurs, students, and taxpayers. This is The Tipping Point, a show devoted to individuals trying to get ahead. We scour the region for the most competent individuals in their business-related fields and allow them to educate us on the sort of business that they're looking for, as well as their specialty. Because knowledge is power, and with enough power, you can tip the scales in your favor. I'm your host, Gabriel Velez. Today's episode is brought to you by Tirani & Velez, the #1 up-and-coming tax firm in Irvine. Today's guest, Ryan Blaise Smith, Senior Reverse Mortgage Loan Officer at Waterstone Mortgage Corporation. As a reminder, if you like today's content, please remember to like, share, and subscribe. Welcome to the show, Ryan.
Thank you, Gabriel Velez.
How are you doing?
Good. How are you doing?
I'm doing great. Good. So what are we talking about? We're talking about the reverse mortgage. And what is the reverse mortgage?
Again, that's a great question. We were just talking about that a little bit here just a couple minutes ago. And the reverse mortgage, pretty much everyone has their own preconceived notion about what that might be. And I mean, it's a loan that's now been around for about 30 years. And the intent of the loan was to create a program for the senior community or for 62 and older homeowners to be able to, start to say subsidized retirement, but really just allow them to be able to age in place.
Sure.
To be able to, have their home. Most people have most of their wealth in their home and the equity of their home. And of course, if they're paying their mortgage payment every month, their primary residence is more a liability than an asset.
Right.
But this essentially would turn their primary residence into an asset where they would be able to access some equity, be able to have some more security for the future, and really be able to, protect their retirement, whether they've planned for retirement already or they haven't. This is essentially a ability to, if they haven't planned, this is another option to, not have to make a mortgage payment anymore, have some access to equity within their primary residence. Or if they have planned for retirement or they have investment portfolio, then it could be used in association or in addition to their retirement. So it's really a loan that's evolved quite a bit over the years. And when they first implemented it about 30 years ago in the late 80s, it was something that wasn't really not necessarily a well thought out loan, but it was a program that didn't have a lot of protections for the borrower, the lender, FHA, HUD, if they were even involved that much back then. That's to be determined. But it was something that that's kind of what I guess spurred on some of the myths about the reverse mortgage that we all know and love today, right? The fact that most people think that they're giving the home to the bank when they do a reverse mortgage, but not true.
Gotcha. So really important topic of conversation today because as we know, most Americans are living paycheck to paycheck. They don't really have a lot of savings. And those who do have any amount of wealth built up, a lot of times it's locked away in their primary residence because they've been paying a mortgage for 20, 30 years or whatnot.
Right.
So before we get into the pros and cons of the loan, I want to get a little bit of background on you because you've come up as a reverse mortgage specialist, which a lot of mortgage brokers are not. Right. So how did you get started and how did you get associated with Waterstone Mortgage? Yeah,
great question. So my background, just kind of being an athlete all my life and playing a college sport, sports just dominated, who I was. And it was really trying to kind of find a second passion in life. And that just ended up being what I found to be real estate and then mortgage. So when I got licensed in mortgage several years ago, the lender that I chose to go with happened to be focusing in reverse mortgage primarily, and they were a national lender national FHA direct lender to be exact, that could do all conventional and residential loans, but they focus primarily in reverse mortgage. And the way that it kind of came about for me was there was ways that we marketed that loan and marketed for that loan. And we just had to be really good at explaining kind of the benefits of the loan and understanding the loan, because a lot of people that were calling in or that we would speak to weren't necessarily calling in for a reverse mortgage. And we had to really know the benefits of the program, what could help the person if this was a program that would work for them. And be able to explain that to them, and then kind of trickle in the term reverse mortgage, or the technical name is the home equity conversion mortgage by FHA. And in doing that, we had to really just kind of so that they could hear the benefits and hear what might benefit them in their situation, tell them the benefits of the program, and then, like I said, implement the term and the loan. And so that really allowed us to be able to, help a lot of people, learn a lot about the loan, because people weren't necessarily calling us for the quote unquote reverse mortgage.
Yep.
So that's just kind of where I got my background and my knowledge of the reverse mortgage. And I'm a kind of a student of the game no matter what I do. So I like looking up a lot of things and understanding so that I can then portray that to the client, of course. So that's kind of where I was at for the last 4 to 5 years. And then, like I said, I transitioned to Waterstone earlier this year in 2018 to really specifically focus on that and serve the local community and more of a national community, because Waterstone is licensed currently in 47 states.
Okay.
So, that's kind of my background and where I'm at currently with the reverse mortgage. And I love the niche and passing the education along to the local community.
Yeah. So Waterstone Mortgage, national corporation, like you're talking about, big lender. How many people in that organization specialize and are really good at reverse mortgage?
0. Well, one. one, including me.
Yeah.
I'm the first person to be hired by Waterstone as a reverse mortgage specialist or a reverse mortgage lender within the. We're an FDIC, because Waterstone Mortgage Corporation is actually a subsidiary of Waterstone Bank in the state of Wisconsin. So that's why we're FDIC, federally registered, and that's why we're almost in 50 states, or probably soon to be in 50 states. But so we are, a national presence for sure. But I think I was mentioning earlier, the amount of reverse mortgages that Waterstone has done in the past could be counted on both hands. So, this is something that we're hoping to kind of spur on, as we continue to age as a population. I think the stat is we're have 10,000 Americans a day turning 65, and that started several years ago and is going to be going on through the year 2030. Okay. So, it's really just kind of serving the aging population, and I guess I kind of fell into this. I didn't necessarily automatically choose it, but, it's something that I see as well serving for a long period of time.
Gotcha. Okay. All right. So not a lot of specialists in reverse mortgage, although most mortgage brokers can sell the product, kind of.
Right. Yeah. There's, you talk to kind of an independent mortgage broker, no matter kind of what company whether they work for themselves or, some umbrella company. Yeah. Most of them will say, yeah, I can do them, but they don't necessarily do them or don't, maybe come across one a year type of thing. Yeah. So there's a lot of mortgage brokers out there, and definition of mortgage broker is that they're, an entity where they shop your loan around to several different banks. They're not lending their own money or have a warehouse line that they lend from their own company. They're shopping your loan around to several different companies and essentially trying to pick the best one. So, yes, mortgage brokers, do them. They're definitely not specializing in them or nor necessarily know them very well. It just kind of depends, I guess, on how long they've been kind of in the mortgage industry. But some of them have seen and been around for a while to kind of have done them through the years and really seen how much they've changed. Yeah. Because that's the biggest thing in the last decade, since 2009-10, when FHA and HUD stepped in a little bit more and started adding some more protections and really just kind of overhauling the loan in the sense that they wanted to make sure that it was a more sustainable loan that was around for a longer period of time, and also making it more conservative in terms of what they were lending, amounts they were lending. So yeah, to answer your question about mortgage brokers, some of them do them, but it's just kind of like their own clientele that maybe come to them and say, hey, do you do this kind of thing? Yeah.
And I think it's important to go to a specialist for this, just because of the suitability and who we're talking about, right? So we're usually talking about older individuals, right? And as you get older, the margin for error becomes less and less, right? So, if you're rolling on a business and you're a 20 or 30-year-old, that's cool. You can rebuild, you can start again, right? If you're 65, not as much.
Right.
So who exactly qualifies for a reverse mortgage?
Yes. So the age has always been 62 or older homeowner. It's definitely someone in their 60s, 70s, 80s, 90s. There's no cap on the age.
Yeah.
And actually in the paperwork of the reverse mortgage, it says someone can live into the age of 150 years old and still be protected and still live in their primary residence and not have to pay the loan back or anything like that. So there's no cap. It's someone who has equity in their home. They can have a mortgage currently, or they can have a free and clear home. It doesn't matter. What matters is the fact that, what equity they do have, do they qualify based on the percentage that they qualify based on their age. So for instance, someone who's 70 years old, they can borrow up to 47 to 48% of the FHA maximum which is just below $680,000, which is the maximum amount that FHA will use for a value on a home. So it's someone with equity, and they're, like I said, over 62.
Okay.
There are some newer proprietary or kind of private products coming out that might reduce the age to 60.
Mm-hmm.
So I think some of those lenders are trying to kind of attack and serve the 55 plus communities.
Gotcha.
So we'll kind of see where that goes. But because I think some of the changes that have recently happened in the last couple of years with FHA and HUD and the kind of the reductions of the loan to value percentages and some of the other guidelines, some of these other proprietary products out, because really FHA can only serve a certain amount of people and demographic, and they're not going to start lending huge loan amounts and to a lot of people. So that's where we'll kind of see some of these more private products come out, and because there's, like I said, there's a lot of people that are going to be in their 60s, 70s, and 80s here in the coming years, and so there's a lot of people that have not prepared for retirement. But like I said, if they have prepared for retirement, this can be used in utilization with it. So there's
So all right, so let's do that. We'll backtrack. I have a list of questions here, but the loan can still be used as a tool for somebody who has a lot of wealth and who has planned well. Let's say right, and be used in conjunction with that. And so the main reason for that is because when you're taking equity out of your property, it's not considered income, right? So you don't have the interplay. You don't get taxed on it.
Correct.
Right, which allows you to keep your tax deferred accounts tax deferred longer, or strategically withdraw from them, right?
Mm-hmm.
Keep you in a lower tax bracket.
Right.
Also, we have the Social Security factor, right? Which this does not contribute to that. So for people who don't know, you've paid into Social Security your whole life, and if you've planned well and you have a lot of income in your retirement, you end up paying taxes on Social Security again. Up to 85% of it actually becomes taxable income, right?
Wow. Yeah.
and so, talk about double taxation. That really is something that gets me fired up.
Yeah, you're riled up.
Right, exactly. Yeah, gosh. And if you could save 6.5% yourself, and the employer 6.5%, that's 13% in taxes that you're paying your whole life. And if you could just invest that in a retirement account, we're millionaires. But anyways,
yeah, digress.
But I digress. Okay, so we run back. We talking about the reverse mortgage, right? And so, I mean, you've seen it work for affluent people to stave off these retirement accounts, right? As well as help them reduce how much of their Social Security is being taxed. Right.
And just touching on one thing about what you said about income. Obviously, it's a loan. It's the only residential non-recourse loan, which just means that it's debt that never has to be paid back. But of course, if the heirs want to take advantage of what equity is left in the property, it'd be smart for them to refinance the loan to keep the home themselves, or sell the property and take the equity and split it amongst themselves and go their separate ways. Also about the fact that this is a loan at the end of the day, and there's no taxes. The only thing that it would affect is people on things like supplemental Social Security, where they're getting an additional amount of Social Security, and there's certain income amounts or amounts they can hold in their bank accounts that have to be below certain minimums. So, there's always ways to work with that, but that's just one stipulation I wanted to mention. And then there's things also with, like Medi-Cal. So that's the same kind of thing with the supplemental Social Security. So, but your, so no tax on the income there, or on the, on any proceeds from the loan, because at the end of the day, it's not income, it's a loan.
Right.
And then what we were talking about with, individuals or couples that are, maybe have their investment assets or have some wealth, they did a retroactive study where they looked back retroactively at the stock market gains or losses over the last 30 years, and they said, okay, what if someone had a reverse mortgage with, essentially their stock portfolio or their investment portfolio, and what if they took out money out of a line of credit on the reverse mortgage during years where their investment portfolio was down or the stock market was down.
Okay.
And they said that, well, if they had done that, of course, looking back at it retroactively, the overall portfolio would have been over $1 million higher, because instead of people pulling money out of this portfolio at down years and keeping it in there and allowing it to grow, I think that's kind of probably what most people do when they're selling or taking money out when things are going down.
Right.
It's kind of hard to stay in there, but that's just one example, and again, hypothetical, but the idea is that let's say a line of credit on the reverse mortgage can go in association with other assets, life insurance policies, stock portfolios, other things like that. It's gone away from the days of the loan of the last resort.
Okay.
Some of the changes that have happened in recent years, because of maybe the upfront cost of the reverse mortgage, which because it is a government insured loan, there's mortgage insurance. There's a cost up front that gets rolled into the refinance of the loan at the time the loan is done, and then there's an ongoing small amount of mortgage insurance. So there's certain things that people kind of have a hard time with the loan, and the fact that you can't borrow that much of your equity, or depending on your age, you can borrow anywhere, like I said, about 45 to 70% or so. But the fact is that the loan can be used either as in a position where there's not a lot of retirement assets, or cash flow is tight, or it can be used in conjunction with, because there's a lot of ways, and especially financial planners and advisors can advise a lot more than I can about ways that they can do that with certain products that are available to every American. So
right.
Yeah.
So talking about financial advisors, I don't hear a lot of financial advisors talk about this option. Is there a reason? Are they not educated on that, or is it like, obviously they're going towards a fiduciary model as well, right? So sometimes it's hard to suggest debt as a solution for investing and things like that. So
right, that's a good point. I would say that most financial planners and advisors actually are becoming pretty privy to reverse mortgage and the benefits.
Okay.
It's just that they are depending on, if they're a firm that has a kind of larger owner broker association tied to them, or their own RIA, then it kind of depends on. Really, from what I understand, is they can't necessarily facilitate a discussion of reverse mortgage with a client, because it goes against some of those fiduciary duties and whatever those laws and guidelines are that have been placed on them. So that's if they actually are found to facilitate, if there's records of them showing, and this is based on my own knowledge, not me as a financial planner or advisor, but that they if they're caught facilitating that, they could get a slap on the wrist type of thing. So it's really kind of an odd situation, because that person being their a family's advisor, not only really financially but kind of in life in a way, that they can't direct them in a way that might benefit them and their overall investment portfolio. So to answer your question, I would say that most of them are aware of the product, or kind of know, at least where we're at in California, they seem to know, and seem, definitely advocates of it, but you'll get a different response on how they each view it, on how they present it or don't present it to people that they know.
Got it. Okay. But they could sometimes make the recommendation of you can't afford your house, right? You might need to sell your house, and from experience, we've all had grandparents, and and we've all gone through that, and I think the older you get, the more you like to stay at home, right? So like you built a home, you raise your kids in a house, right? You don't really want to move into an assisted living facility. You don't want to necessarily downsize all the time, even if it's a 2-story house and you can't climb up the stairs anymore. And so this option gives people an opportunity to stay in their home longer, or, actually expire in their home.
Right. Yeah. So, as I think I said earlier, it's 150 years old no one has lived that long. Essentially, the idea is that the, husband, wife, whoever is the, whoever qualified for the reverse mortgage can live in the home the rest of their life. So as long as they are living, it's their primary residence. They can own other residences as well. It's just got to be their primary residence. And the great thing is that there's been even protections added where, if a spouse situation, let's say one is 65 years old and let's say the younger spouse is 58, both spouses still qualify. And even though the younger spouse who's 58 years old is not 62, they're classified as what's called a non-borrowing spouse. And even if the older spouse passes away at any time, even the younger spouse was not 62, they're still protected by the loan. So that means that they can live in the home the rest of their life, even if they lost income because the older husband or wife passed away. They're protected to live in the home as long as they want. And the great thing is that there's no, late payment penalties on the loan, obviously, because it's a reverse mortgage. There's no payment required, but there's also no prepayment penalty. So if someone in a year, 5 years, 10 years from now decided they want to sell the home and move somewhere else, or, refinance into a better program or something else that came about, they could do that. So, there's no restrictions on it. The bank doesn't, necessarily own the home as most people, view that general statement. And if you have a living trust or protection on the asset of the home, like an attorney would instruct you to do, you get to avoid probate, and the heirs can take over the property pretty seamlessly. So they just need to pay off the loan within 6 months or up to a year. They have, once the last surviving borrower dies.
Got it. Yeah. So they have the option of refinancing into a traditional loan,
right,
or getting all their ducks in a row and disposing of it in the estate, right? So,
right.
Awesome. So how much? What are the economics of this? Like, what does a reverse mortgage usually cost?
Yeah, and that's really kind of the sticking point, or I'd say the only sticking point once really people understand the benefits of the loan. Is the cost, and I like to say the mantra that this kind of follows is you pay for what you get. And if you weren't paying anything, you'd be getting not a great product.
Yeah. And
in this case, you're getting a great product. So you're going to pay a little bit because at the end of the day, FHA, they're insuring and guaranteeing the loan and all the benefits of it. And, federal government entities, who supports that? The American taxpayer. So,
right.
Because the loan is a non-recourse loan, and I don't want to get too technical because I'm just going to confuse everyone, but if the balance, in the worst case scenario, if the balance of the mortgage grows to be above the value of the home at any time in the future, the homeowners and the heirs don't owe that money. So that's the whole point of the non-recourse loan. It's debt that in the worst case scenario doesn't have to be paid back, or the heirs can actually keep the home for 95% value of the home at that time. So not only do they not owe any amount of the mortgage that's quote unquote underwater, they get a 5% reduction if that's something at that time based on mortgage guidelines that is depending on what the loan environment is at that time. But the cost is, because of that, you have mortgage insurance. So you don't have any really extra costs more than a typical loan.
Okay.
Except for you have a 2% cost on the appraised value of the home at the time of closing. So you have your normal escrow and title costs like you do completely normally. And then, sometimes depending on the situation and the borrower's situation, there could be an origination charge or, like a point or less or something like that, just depending on the situation. And then that mortgage insurance, which is the majority of the cost, which, is 2% up to that just below $680,000. So, and then you have a 0.5% mortgage insurance that's ongoing every year on top of the interest rate. So if the interest rate is 4.5% or 5%, you got an extra 0.5% on top of that. That's ongoing for the life of the loan. So it's really, when you look down at it, it's not very much more or even necessarily more than a normal loan. It's that you do have that kind of that 2% cost up front that gets rolled in the balance of the loan, that sometimes, if someone's home is $300,000, that's $12,000 that FHA is taking out of their loan that's being funded at closing. So it just gets rolled in the balance. So.
Got it. Okay. Sounds good. And, part of the cost is the government's, they come in, they regulate it to make sure that mom and dad are safe in the home.
Right. Subsidizing essentially. Yeah.
And the
worst case scenario. Right.
Exactly.
Yeah.
All right. So what, do you have any case studies for us or any?
Yeah. Well, that's a great question. Is there any questions out there that people that are glaring about, I guess, here's one thing we haven't talked about.
Okay.
A reverse mortgage can be used to purchase a home.
Yeah.
So, some of those are the best case studies because I like to talk about a couple in particular scenarios that I've done myself where I had a retired gentleman in Northern California who was 92 years old. He had a retirement account, or I think it was something like a Vanguard or annuity account or something like that, and had just over $1 million, and he wanted to die in his own home, and he'd been renting for I don't know how long. And so we entered escrow actually 2 or 3 times. He kept backing out because he's 92 years old and he wasn't sure he wanted to do this, but he was sure he wanted to do this, I guess.
Okay.
And so we finally closed an escrow where he purchased a home in the Bay Area, with a yard and an open area that, he was able to do that even though he had not very much income, really probably not enough income to qualify for even a reverse mortgage loan. Mm-hmm. Because he had this large account, there's something called asset dissipation or depletion with, or asset dissipation with reverse mortgage, where you have $1 million and you're only using $500,000, let's say, to purchase a home with a reverse mortgage. So, let's say he bought $1 million home and he $500,000 reverse mortgage and a $500,000 down payment with cash. Yep. He still has $500,000 left in his account, and since he's 92, his life expectancy is only 4 to 5 years, right? Because he's so young. And so because of that, you dissipate that amount over 48 or 60 months, that $500,000 that he still has. Yeah. And that's hypothetical income he has for every month. That's plenty of income to qualify.
Yeah.
So that's a cool thing about the reverse mortgage is that, not only can you purchase a home with it, but if you have any assets or, you want to buy something and you're thinking you have to buy it cash, you really don't.
Yeah.
That's a great strategy for he could even use that $500,000 for an additional income stream, with his financial advisor or whoever he's working with. So there's ways to do that, and it makes more sense to keep that money and do something with it and make money and come off of it instead of use it and just park it in a home that you're purchasing for $800,000 or $1 million or whatever it is.
Yeah, and because if it was a reverse mortgage, he didn't have to make a payment either.
Yeah, reverse mortgage, you don't have to make a payment.
Yeah, so he just
so taking it a step further with another couple, in this case it was a couple here in Southern California that helped purchase a home with a reverse mortgage. They actually sold their home that they raised their children in for, so they owned it for 30 to 40 years. And because of that, in California, their property tax base was low.
Yep.
So they sold this home for, let's call it $1.5 million, and they wanted to buy something new, actually brand new, recently built. And I can't remember if it was going from 1 story to 2 story, 2 story to 1 story, but this was a house that they wanted. They got into escrow. We had the mortgage ready to go as part of the purchase. They used, since they had a pretty hefty loan on their first home, the home that they just sold, they got some proceeds from it, were able to still keep some money in the bank after coming in with the down payment for the new home, supplement the rest of the purchase with a reverse mortgage. So not only did they, at the end of this, which, we closed the loan, escrow was great. Some of the underwriting doesn't take nearly as long, so you can actually close sometimes sooner than a conventional loan. But purchase a home, reverse mortgage to purchase it, used part of their proceeds as a down payment, was able to keep some money in the bank after selling the home. And not only do they not have a mortgage payment going for the rest of their lives, but they were able to transfer their property tax base.
Right.
In this case, I can't remember if it was Proposition 60 or 90. One of them is intra-account, where they stayed in Orange County. So they moved from one city to another city within Orange County and was able to transfer their $2,000 a year property taxes.
Yeah.
So purchase a $900,000 home.
Yep.
Keep their property tax base low, and that to me is pretty much a grand slam.
That's a win. Yeah, win all around.
Yeah. So and the realtor, gets to sell their home and help them purchase a new home.
Oh yeah, double ending.
And so this is something huge for realtors too, in terms of people either downsizing, upsizing, right sizing, whatever it may be.
Yeah.
There's clientele out there that need to be serviced and need to be given the information about what's available out there.
Gotcha.
So I guess that starts with me.
Absolutely. Well, I mean, that starts with the podcast. That's the whole reason behind it, right?
There it is.
Get people informed, let them know what's out there.
Right.
So this has been an awesome podcast today, Ryan. I really appreciate your time.
Cool.
Reverse mortgage, not just a loan of last resort, actually works for wealthy people as well. You can even buy a home with it.
Yeah.
Super flexible, and government's going to regulate it to make sure that it stays safe for people.
Exactly.
So
cool.
thank you, Ryan.
Thank you, Gabe. Appreciate it.
Yeah, appreciate it.